Why do countries need to be able to borrow at either near 0% or now even negative rates? Are their accounts really that bad?
Well, many countries find themselves in such a bad situation in terms of structural deficit, the deficit that they incur even in periods of growth. They spend way too much above revenues, no matter what happens with the tax revenue base, that they need to find ways to reduce the percentage of interest expenses that they have in the budget. No, and as debt balloons, many of these nations simply cannot afford the slightest increase in interest expenses. You have countries, for example, like Japan, that despite having zero or real negative rates, spend about 22% of their budget in interest expenses. And in numerous countries in Europe, for example, the interest expense bill on a yearly basis is about 10-11% of the entire budget. Therefore, the smallest increase in interest rates, the smallest increase in borrowing costs, can really wreck the finances of these governments that deficit spend in growth and recession times.
What do you think is going to happen? Are we going to see some kind of debt restructuring, as they say, or canceling of some of this debt by the central banks around the world?
Well, central banks are monetizing what they can, but obviously that doesn't solve anything because, in essence, the central bank action has not been a tool to reduce debt or to reduce deficits, but to actually get into higher levels of debt. It's an incentive to borrow and to take more risk. So what will likely happen is probably three things. Now, the first one is that they try to inflate their way out of debt. This doesn't work in an environment in which deficit spending occurs even in growth periods because the input costs of governments as well go up faster, and therefore debt continues to balloon. Second is that they try to improve the levels of growth, and therefore debt to GDP is reduced because GDP grows faster. That is at least what some countries are trying to do. Very difficult as well because the high level of debt is creating lower productivity growth and lower potential growth. And the third way, unfortunately, is that it always ends up with a financial crisis. And unfortunately, with the difficulty of achieving high debt reduction via growth or debt reduction with inflation, which is what they're trying to do now, it is very likely that what we will see is a debt crisis that, as we saw, for example, in the Eurozone a few years ago.
This is a relatively new phenomenon in the past, I don't know how many decades, this extreme indebtedness by countries. What do you put it down to? What changed that sparked all of this?
We have seen elevated levels of debt before in wartime. And obviously, that made a certain sense because countries spent massively because of the war effort. Revenues collapsed, the economy was in an absolute wreck. We can understand that, don't we? But these levels of debt in peacetime, we have not seen. And the reason for it is because there is a very high incentive coming from central banks and coming from the monetary policy to push governments to test the limits of their levels of indebtedness. Interest rates are low, there is plenty of liquidity. In growth periods, governments say that it's time to spend and to invest, and in recession periods, they say as well that it is time to spend and to invest. So what ends up happening is that debt balloons no matter what, whether you're in a growth or in a recession period. And that that is what's different from other periods. In other periods, what you saw, for example, in the United States, once the war ended, was that government reduce government spending, cut government spending by half, no? And it started to generate a surplus. And between 1948 to 1952, the government was basically running a very significant surplus. But that doesn't happen anymore. What we see is governments simply pushing the limits of debt, thinking that nothing will happen. And things tend to happen. Obviously, they look in a very short period of time. They think it didn't happen in 4 years. Therefore, let's go crazy for another 4 years. But ultimately, there is a point in which confidence about the solvency and confidence about the stability of the economy, even of developed economies, starts to crack.
What will that look like, and what do you think the kind of the spark might be?
Generally, what sparks debt crisis is that you have a combination of a break in the confidence in the currency with a break in the confidence of the ability of governments to sustain their levels of tax collection and improve their finances. So it's that double combination. Uh, what you basically see is that there is no debt crisis until investors start to sell the government bonds that have been issued, the ones, so the stock of debt. There are in debt, there are two problems, no? The stock of debt and the flow of debt. Stock of debt is what has already been issued and investors have in their sort of in their accounts, and flow is what is being issued every year with new deficits, etc. When those two start to see outflows of capital out of debt. So people not only fail to buy the new debt that has been issued, but they also try to get rid of the debt that has been issued in the past. Then is when you get a debt crisis. And that tends to happen because there is a perception that either the government will do a full default, or that even worse, that government will try to default sort of the indirect way, which is via massive inflation, i.e., destruction of the purchasing power of the currency.
But how does it work? I assume it isn't regular investors who are buying this massively negative yielding debt in Europe. I assume it's the central bank who are buying most of the country's debt. So how does it get to a stage where even does the central bank lose faith in the country, or how does this manifest in these conditions?
Well, the central bank it cannot increase its balance sheet eternally. It can increase its balance sheet significantly, but not eternally, because there is to the balance sheet of the central bank, you have some credibility about the assets. So the balance sheet is supported actually by the fact that the assets that it owns, fundamentally government debt, is perceived as a low risk and high level of stability and solidity debt. No, therefore, when you start to see cracks there, you see cracks also in the ability to increase the balance sheet. Is what tends to happen. Is that it's just not eternal, and the purchasing power of the currency starts to collapse. So it basically becomes a monetary phenomenon in which you go from monetizing low risk debt to destroying the currency with assets that are actually worthless. No, so which type of investors buy negative yielding bonds? Those that basically have to, because it's in their mandate. There are pension funds who have to have a certain percentage of whatever is being issued by governments in their funds. Second, those that are expecting those bonds to appreciate in price even if the yield is negative, so they will get their return because it will appreciate in price, and those are betting basically on the stability of the economy that will make those bonds more valuable. And there's also all of those passive investors that need to be indexed. So there's a number of people, basically, number of investors that buy. But right now, both at the in the United States, the Federal Reserve, but in the European Union, it's been happening for a while with the European Central Bank. The European Central Bank is buying 100% of net issuances from many of the sovereign issuers, and that's why we see things like Greece issuing at negative yields. And that is such a massive discrepancy between the yield at which those bonds trade and the reality of the solvency and the ability to repay of the issuers that it will inevitably at some point create big headaches for both the central bank and for the governments.
Are international investors, maybe you've spoken with or read, are they losing faith in these types of institutions, these currencies, or how do they feel?
Well, most international investors are obviously showing one very clear signal of lack of confidence in this system being perpetuated forever, is that they are getting out of sovereign bonds. That's why the central bank has to purchase 100% of the net issuances. So they don't buy the new sovereign bonds that are issued. And what they do is basically buy equities or buy risky assets that will reflect the inflationary pressures by getting higher multiples or higher valuations. No, so that is a signal in itself of lack of confidence, the fact that there is in reality no real secondary market demand for most of the European issuers that have negative yielding bonds. And you have seen it, for example, that even with the promise that the European Central Bank will purchase the entirety of a new issuance in the secondary market, bondholders are showing much lower level of a bid to cover ratio, that is the number of times that an issuance has been oversubscribed, than in the past. And that shows basically that demand is coming down aggressively, even from those funds and pension funds that have to purchase sovereign bonds no matter what.
Promise this is the last question. This is just fascinating. Would you agree that this is a really extreme form of central planning? It's really incredible. Am I mistaken?
Absolutely, it is. This is very aggressive central planning, and uh, many of our viewers might think, "What's bad about it?" The central bank is allowing governments to borrow cheap. That means that public services are not under any risk, and that governments can borrow whatever they need. All is good. No, it looks acceptable, doesn't it? Until you realize that your savings and your wages are worth less and less and less, because that's the flip side. The flip side of it all is that pensioners find it more difficult to get to the end of the month, that real wages are weaker, that the savings of citizens are eroded almost on a daily basis. And also, an important flip side of it all as well is that by leading investors into financial repression, i.e., forcing them to take much higher risk than what they would want to in order to get a little bit of yield, they also accelerate the path to financial crisis. So it's not a zero sum game. It's a very negative outcome every few years.
Incredible. Daniel Lacalle, Tressis, thank you.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.